College football season, that's underway, sort of. Tomorrow's the big day. Competition for sports betting is just getting started. Contessa Brewer covers the space for us and joins us now with why this is the time.
This is it, because it's the biggest opportunity for U.S. sportsbooks. It's the time when they can win more new customers, grow the pot of wagers, and the industry expects an 8.5% increase in handle. Now, Americans are expected to wager $30 billion this NFL season, according to the American Gaming Association. The lion's share of that will go to FanDuel, which is owned by Flutter, and to DraftKings. Both of those companies dominate the space in the United States, and both have seen double-digit gains in their stock price this year. They're facing growing competition from BetMGM, which is jointly owned by MGM and European company Entain. And after losing ground for a couple years in terms of market share, BetMGM has reversed course, solid third place, showing profits that pleasantly surprised the street. And Caesars also is posting profits in its digital business, but its shares stand out in this crowd. Year to date, down almost 20% when competitors are up double digits. The casino company has been hinting, Brian, at the possibility of spinning off its digital business to maximize value. All of these companies are dealing with not only their smaller competitors, Penn, Rush Street Interactive, and the like, but the entrance of predictions markets and sweeps casinos and the offshore books.
All right, stay there. Let's add another voice to the conversation for more on what to expect from the upcoming sports gambling or gaming season. Is Morgan Stanley's Stephen Grambling to talk about gaming and gambling. You're the most perfectly named man, Stephen. We're glad you're on. Who's looking? There's a lot of competition for that sports betting dollar. Who's looking really good right now?
So, Brian, I think it's the market leaders are still the ones that you want to be looking at, and that's DraftKings and FanDuel. Both DraftKings and FanDuel, Flutter is the parent for FanDuel, have been able to hold on to their market-leading position heading into this football season. And I think it's a key time as we look at the next 2 weeks as well, into the beginning of football season, because that's typically the best kind of trading window as well for these stocks, which we still think are also one of the best single growth stories in all of consumer. You mentioned that retailers ahead of the break were probably ripping their hair out or screaming. Well, this is a space that's going to have growth because fans are going to be screaming, and you're going to be having more and more betting that's going to be going on for years to come. We still see a path for the overall market to actually get to a $25 billion GGR market beyond 2027. We think that on the casino side, it could be a $15 billion plus market. That's over 18 to 20% growth for the next 3 years. Basically one of the best consumer stories out there.
We talk a lot, Stephen, about how the iGaming market, that is online casino games, really outstrips the profits of sports betting. But now you have all these new entrants with Kalshi, Crypto.com, Polymarket on sports. And by the way, they're going to offer those trades where FanDuel and DraftKings can't. The most populous states in the nation, California, Texas, and in Florida, where Hard Rock and the Seminoles have a near monopoly. How do you factor in the opportunities with predictions markets versus what already exists with sports betting?
So we actually published a note on this, but we talk about how this is actually an opportunity longer term for these companies. You saw that FanDuel partnered with the CME Group to start launching non-sports exchanges. This is something that they've already been doing for years through Betfair, so they know how to do this. They'll have a complete product where they can not only have non-sports, but also all the parlay bets, all the different types of products that they're offering now. So we think they'll have a better, more competitive advantage. Now, in those states like California and Texas where they can't currently compete on sports betting, I think this actually is a bit of a wake-up call for regulators to say, we may need to think about legalizing sports betting because this is money left on the table. This is basically taxes that are not being collected in those states.